traders remain focused on the Fed's possible intention to phase out its stimulus programs. Against this background, the pound sterling is still trading near its lowest level since late July. Meanwhile, important data on Britain's labour market has been published today. Although the UK unemployment rate fell to 4.7% from 4.8%, this fact failed to support the British pound. The currency has been gradually losing in value since the very early trade. The reason is that statistics reflect the labour market condition for June, and Britain's claimant count indicator for July was of far greater interest among traders. This data is more recent and allows market participants to predict further changes in the level of unemployment and employment. Thus, the UK claimant count fell by 7,800, while analysts expected a drop of 180,000. In other words, the unemployment rate is unlikely to decline further in the near future. And this is the best-case scenario. The figure may even grow. As a result, the pound sterling came under downward pressure from this disappointing fact. As for the euro area, the second estimate of the region's gross domestic product for the second quarter had no impact on the euro's dynamics as expected. The figure was almost in line with the initial estimate. The annual GDP reading was slightly revised downward to a 13.6% rise from Eurostat early estimate of 13.7% growth. Notably, the economy shrank by 1.3% in the first quarter, and thus the difference between the first and the second estimates is insignificant for investors to review their long-term positions. That's why the common European currency continued to drift sideways. Nevertheless, the market will most likely revise somewhat when the US session opens. However, the greenback may come under pressure as growth of US retail sales is expected to slow down. At the same time, the annual data is still of little interest. In contrast to the monthly one, experts predict a 0.3% monthly increase in retail sales. This fact is a cause for the serious concern, since consumer activity is the main growth engine of the US economy, while retail sales are a vital economic indicator reflecting this activity. Still, the dollar's losses are likely to be limited by statistics on industrial production. Thus, US manufacturing output is anticipated to increase by 0.3%. At the same time, annual industrial output growth may ease to 7.2% from 9.8%. Notably, monthly data is currently of greater importance. The euro-dollar pair completed its correction to the resistance level of 1.18. As a result, the volume of long positions decreased and the price reversed. Now, market participants expect the pair to recover from its corrective movement. If the price fixes below the level of 1.1750, the volume of short positions will most likely continue to increase. In this case, the way towards the support level of 1.1700 will open. Alternatively, if the price slows down near 1.1760, the quote may start moving sideways. The pound-dollar pair has been trading within a sideways channel between the levels of 1.38 and 38.85 for 5 days in a row. A consistent rebound from the specified borders indicates a trading volume accumulation phase. This in turn may lead to a new strong momentum. The trading chart shows that the price has made an attempt to break through the lower border of the sideways channel. To confirm the signal indicating a continued downward movement, the quote needs to fix below 1.3785 on the 4-hour chart. In this case, the pair will most likely head towards the levels of 1.3750 and 1.3640. An alternative scenario implies that the pair will keep moving sideways in the case of price fails to break through the lower border. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.